This is a question from somebody saying, I work in my own business. I spend a lot of time, 3 or 4 days a week trying to grow my business, but I can't charge myself a salary. So that seems very unfair, because if I was employing somebody, I'd be able to charge them a salary. So I'm assuming, by the way, this video, that the person asking the question is a sole trader. Watch the video and I'll answer the question in terms of being a sole trader, a partnership, and also a limited company. An interesting question, and it's a thought that crosses most people's mind, especially when they're self-employed. So let's break this into 2 scenarios. Let's say you have a limited company and you're a director and you own the business, or you're also a shareholder or the shareholder. You can go on the payroll as a director because you're an employee of the company and pay yourself a salary based on the hours that you do, or the time, effort, energy that you expend. But have it known that you'll have to pay tax and national insurance as an employee, and your company will have to pay employer's national insurance on those funds, or the salary that they pay you, depending on how much it is. So if you're on a, say, £35,000–40,000 salary, for example, you'll have income tax, employees' national insurance, and employer's national insurance to pay. So once you work that out, you might say it's not worth doing that, and you might just take a lower salary and then take a dividend, or set out your arrangements in a different way. Now let's look at you being a sole trader or a partner. If you're a sole trader, for example, then the time that you expend is your sweat equity, because you're looking to grow the business. So you can't claim that against your own sole trader business, because you are the business. So that's you paying yourself, and that can't be an expense. So all the time that you're expending in growing your business is your sweat equity, and you're going to build that by obviously growing and creating a really good business, I hope. So that should work well for you over the long term. If you're a partner and you're in partnership with somebody else, then you can have a partner salary, but again, you'll have to pay tax on that. And as a sole trader, if you take out money and pay yourself a salary, which you can't do, but if you were to, that's the same as you making profit at the end of the year and paying tax on it. So you're at the same place as you were to start off with. Because a limited company is a separate legal entity, you can pay you a salary. As a sole trader, you can't pay yourself a salary, but if you leave all the money in the bank, you're still going to be paying tax on the same income if you create any income. So there's no difference. I hope I've kind of explained that well enough for you to understand. If not, post another comment if you need any clarity, and I'll be happy to answer that question for you in more detail.